Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. It is great to see you here today. Remember, this show is for you. So if you have a question, leave the ticker symbol in your question in the comments, and we'll go over it live during the show. It was a up day in the market today. Pretty powerful buy the dip bounce in the market. But remember, today was just one day, okay? There's still a ton of uncertainty in the market. And I think the number one reason why the market bounced today is because oil prices dropped by 12%. That big of a drop in that commodity is what I believed fueled today's bounce. Because where did we see the biggest bounces today? Real estate, financials, and technology that was beaten down over the past month, month and a half, 2 months, maybe the whole year. Those were three areas where we saw a really strong bounce, especially in financials. So here we are today. We are have a green day. The S&P was up over 2.5%. That's great. But remember, it was just one day. We have to pay attention to our surroundings, our environment, to understand the movements of what could happen following up. So if for some reason overnight oil prices go back up, you can expect that the market would go down tomorrow in the complete opposite reaction of the way that it performed today. So keep that in mind. We also have news in the after hours that Amazon, they have announced a 20-for-1 stock split along with a $10 billion buyback authorization program. Now, this is going to replace their current buyback program that they do have. I'll go into a little detail on that in just a moment. Also, Thor Industries, which is an RV builder manufacturer, they reported their biggest EPS beat in the history of the company. And then, of course, it was a good day in the market. So remember, if you have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show. All right, let's just get right into it while you're getting your questions ready. The S&P 500, like I said, it rallied, we could say 2.6% if we're rounding up that percentage point there, 2.6%. As a buy the dip efforts, they were emboldened by that 12% drop in oil prices. Now, the NASDAQ gained 3.6%, the Russell 2000 gained 2.7%, and the Dow Jones gained 2%. And it was in that order, too. The pullback in oil was due to a bunch of factors. One of the main reasons oil pulled back was hopeful sounding rhetoric that came from Russia and Ukraine. There could be a potential ceasefire, at least talks tomorrow. So that is, I think, the main reason that drove oil prices down. Plus, President Biden is looking to South America, Venezuela, particularly, to get oil shipped to the U.S. So there were a bunch of factors in the oil dropping by 12%. But a 12% decline for a commodity like that is still up 45% over the past year, that type of drawdown needed to revive some sort of risk sentiment, right? And that's what happened today. The technology stocks that were beaten down the most, real estate, financials, they all came roaring back, baby, roaring back. Now, even if the macro environment is still in an inflationary situation, and remember, we get CPI data tomorrow. So that could play a big role in what the market does tomorrow, especially if inflation comes in hotter than expected. So it's too early to know if oil has peaked for the near term, for the short term, but there was hope that consumers could start to see maybe some lower prices at the pump because of this 12% drop. Now, stocks that were hit the hardest this month were among the biggest winners and gainers today. particularly those in the information technology sector of the S&P 500. That was up 4% today. Financials were up 3.6%. Communication services, 3.5% gain today. And consumer discretionary up 2.9%. Those were the leading sectors. Now, the energy sector, on the other hand, fell 3.2% amid the weaker oil prices, where utility sector, it was down, and that's a defensive stance going into utilities. That was down 0.8%, and that was the only other sector that closed lower besides oil. Now, both of those sectors, oil, energy, and utilities, they still remain higher for the month, okay? So there was likely some profit taking going on with those two. Now, Bumble, BMBL, crazy name there. Let's get on the right cursor on the right screen. BMBL is the ticker symbol for Bumble. It was an individual standout today. Shares soared 42% on better than feared earnings results. Look at that, 41.9% for Bumble. That's crazy. And this is a dating app, right? Where women are the ones who initiate the date. Okay. But if we look, that 42% gain today, man, even though that was a big one-day gain, look at how far the stock has fallen. It was over here after it IPO'd. What's this high right here? 76.49 is the 52-week high, and now it's down to 23.64 after that 42% run. So that was interesting. Now, besides the scope of today's gains, the risk-on mindset was corroborated by the declines in the CBOE volatility index, the US dollar index, and gold prices declined 2.9% to get back under $2,000 an ounce. Let me just pull up gold here for a real quick second so we can look at this chart. It got down to, it closed at 1987, and it's at 1981 now. So it's come back up just a little bit in the after hours. But yeah, that was a pretty big pullback in gold. And remember, yesterday it popped 2.6%. So it erased that gain from yesterday. But it is in the green right now in the after hours as it has started over again. All right, so that's gold. Also, Treasury prices reflected this or corroborated this risk on by the dip sentiment in the market today as well. Now, to be fair to Treasuries, Treasuries might have been pressured by an acknowledgement that one trading day does not remove inflationary pressures, and that the Fed is still on track to hike rates multiple times this year, starting next week. Yeah, next week, the Fed is going to hike rates. We all believe it's 25 basis points. That's how high it will go up. So it'll go from 0 to 0.25%, up to 0.25% to 0.5%. That's where it will be heading, a 25 basis point jump. Next week. I can't believe it. It's already happening. Now, on a related note to the Treasury market, the $34 billion 10-year Treasury note auction, it received lukewarm demand. Not too crazy, but definitely was not any lack of demand. The 2-year increased 4 basis points to 1.67%, and the 10-year increased by 8 basis points to 1.95%. Now, on the economic data front today, we had job openings decreasing to 11.26 million in January, and that was revised from the record high 11.45 million in December. So still a lot of vacancies and a lot of people quitting their jobs. 11 million, that's a lot. But it just goes to show you that the economy, it may not be as strong as we think with all of these job openings out there and nobody wanting to fill them. Why are these vacancies there? Why don't Americans want to fill these positions? What's going on? Well, inflation has a big role to play in that decision. I mean, imagine, uh, look at this scenario. Housing prices go up, right? Fuel prices go up. So uh, maybe you lost your job during COVID, or maybe you kept your job during COVID and you were renting someplace. And then the landlord says, you know what, the market's really hot right now. We want to sell our property. So I'm sorry, tenants, but you guys have to move out. And then you have to move further away from work and get a smaller place. And uh, and then you're traveling now further to work. Gas prices are going up, so now it's costing you double to fill up your tank. What used to maybe cost 30, 40 is now 80, 90. That's a big chunk of change right there, especially if you have to do it twice a week. So there can be a lot of issues. And then because you have to go rent someplace else, now rent's gone up. It's higher than what you were paying because you have to go find a new place. So there can be a lot of factors involved in this 11 million job opening. We also got the MBA or the weekly MBA mortgage applicants, and that rose by 8.5%. And that was following, remember last month it was, last week, it was a 0.7% decline last week. So up 8.5%. All right, tomorrow is a big day for economic data because we get the consumer price index for February. What is it going to show? Inflation went up. I'm sure of it. Absolutely sure of it. We also get the weekly and the continuing claims report and the Treasury budget for February. All right, here's where we stand year to date. The Dow Jones is still in the top place, down 8.4% year to date. The Russell 2000 has now moved up into second place, beating out the S&P 500, mainly because of those big gains, well, solely because of those big gains today. Small caps really kicked it off today. It's now down 10.2% year to date. The S&P 500 is down 10.3% year to date. So just a tenth of a percentage getting the small caps up there above the S&P 500. And then the NASDAQ, it's down 15.3% year to date. All right, let's check in on Bitcoin right quick. And then I want to talk about Amazon a little bit more about that 20-for-1 stock split. And I want to do a deep dive for you on Thor Industries. So BTC USD on TradingView. And whoa, that's not right. All right, BTC USD. And I go down to Coinbase to get the data from. All right, there is a link in the description for a free account to TradingView. Look at this on TradingView here. Bitcoin today, I mean, it just surged 7.9%. Call it 8% right there. 41,837 right that moment. It got as high today as 42,597. So a really, really good gain. Now, there is this one trend line, price point right here that has had quite a few reactions on it, and that's right at that 42,000 mark. It's a big line. It's a resistance line for the most part, but it can act as a support line. If we look back here in the middle of February for about 5 days, it acted as support. And then, of course, it was the top of our middle yellow box right here, 42,000. So that's a pretty significant area there. If we look at, let's see if I shrink it up a little bit. Will this help? There we go. If we look at volume here, volume is right about average. It's not really any higher than it has been over the past 2 years. So volume was pretty typical today, even though it was in the green. Volume was about average. We had how many million here? 23.9 million for volume. So that's pretty good. Now it is over 8% for the day. Okay, let's go to Ethereum, ETHUSD on TradingView. Let's take the top one there. All right, Ethereum also 5.3% right now, and it's also sitting at this price line resistance. But there's another more powerful resistance area for Ethereum right now, and that's its 50-day moving average, right? Today, it got as high as 2774. The 50-day moving average is 2771. So it was just 3 points above that 50-day moving average. That's the real resistance that Ethereum ran up against today. And then there's also a price area here where there's been lots of points of action taken, and that's at about 2750. And it is below that right now. But that 50-day moving average, that's the real big kicker right there for resistance. All right, let's continue moving on. Now, real quick, before we get into, I want to talk about Chargepoint, not Chargepoint, CrowdStrike real quick. I want to talk about Amazon and the 20-for-1 split and the reauthorization or the new authorization for buybacks and a deep dive on Thor. But real quick, if you could, smash that like button, share this video, and beat the market with us by clicking the first link in the description. You'll have fun with it. All right. Thank you, my friends, for doing that. Let's look at Chargepoint and their earnings and what came in. So it's CRWD is the ticker symbol for Crowd. Did I say Chargepoint again? My goodness. CrowdStrike, here we go. It is up 12.4% in the after hours, but it had a nice day today. It was up 8.3% in regular session there. So if you add those two together, 20%. 20% gain if we take regular session plus after hours, put them together, and it's up to $191 a share right now, even, which if we look yesterday, CrowdStrike has been in this trading channel here, and it's going up ever so slightly. If we look at the bottom trend line here, we've got a higher low and a higher low. Okay. And yesterday it got down to this trend line here, and your thinking would be that CrowdStrike should bounce off of this. Now, for some reason, TradingView does have the earning block here for TradingView. It's off a little bit. It is not on the right day. So I guess TradingView, if you're watching, that'd be cool if you were. Oh, and if TradingView, if you are watching, I want to do live streams on right on TradingView. So let me know. But this is a little mess up here. This needs to be over here on today's date, the 9th, not over here on the 16th. All right. So anyways, here's what they did. EPS of 31 cents a share, and that beat by 11 cents. And they had revenue of $431 million. That was a 62.7% year-over-year gain, and that beat by several $1 million there for Chargepoint. All right, cool. So there's Chargepoint for you, and what they did. All right, let's keep rolling on. Let's go to Amazon. AMZN is Amazon. All right, so we can go right over here and look at the filing for Amazon, and we go down to this fourth page, excuse me, right here. And then if we blow this up and look, we can see right here, this is the stock split for Amazon. And let me just look over here real quick again for Amazon. So we've got Amazon up 6.6% in the after hours. They were up 2.4% in regular session, but that's a 6%. That's a big gain for Amazon, and that gets them right there at 29.63, almost $3,000 a share. But again, this is a 20-for-1 stock split, and it says right here that on March 9th, 2022, which is today, the board of directors approved a 20-for-1 split of the company's common stock. And the important dates that you need to know is that this. Let's get to it. Where is it? Okay, here we go. Company shareholder of record at the close of business on May the 27th, 2022. May 27, 2022. That's the big day. If you want to be involved in the stock split 20-for-1, you have to be a shareholder of record at the close of business by May 27th, 2022. And you'll get 19 additional shares for every 1 share held as of that date, reflected in the accounts on or about June 3rd, 2022, and trading is expected to begin on a split adjusted basis on June 6th, 2021. So there you have it. Those are your important dates that you need to know. So you have to be a shareholder by the end of business on May 27th, 2022, and then you'll get 19 additional shares for every 1 share you hold. And if you're a fractional shareholder, it will most likely be handled in your brokerage account, and you'll just get whatever the math works out to be. So 19 additional shares for everyone you hold, and those should be in your account on or about June the 3rd, 2022. And then the split adjusted trade should begin on June the 6th, 2022. All right. So that's for the important dates for the 20-for-1 stock split for Amazon. All right. Now, the other thing to notice for Amazon is they announced a share repurchase authorization, and this is good, right? Because this can help a stock's price to go up, right? To appreciate. And usually in a share repurchase program, you take that, you add if there's a dividend, and that's how you come up with the best dividend paying stocks that are out there right now. Just a little secret there. That's one of the ways that we calculate the best dividend stocks. And if you want to get in on that, you can click the join button, or you can click I think it's the second link in the description, and that will take you directly there. Okay, so with the share repurchase program, and again, this was announced today after the market closed, March the 9th. Now, they're authorizing a $10 billion repurchase program. Now, the program allows the company to repurchase shares opportunistically, so whenever they want, basically, right? So if the stock is down, they can purchase shares to help have the stock price go up, or at least maybe stop it from going down so much. but there's a little asterisk there. They won't spend all $10 billion at one time. Okay. They'll spread it out. So they can buy shares whenever they want, um, as long as they believe that it will provide or enhance the long-term shareholder value. Now, the other thing that it says in here is that this new share repurchase authorization, it does replace the previous $5 billion stock repurchase authorization that was approved by the board back in 2016. And during that share repurchase authorization, they only purchased $2.12 billion. So, not quite half of what they allowed themselves to repurchase. I find that interesting. So, with this new $10 billion repurchase authorization, maybe they end up spending five or not even five. So, it's something to keep an eye on. But this is a good sign for the company. It's a way for the company to reward shareholders. Uh, so that's a bonus. That's a plus. That's good. If you are a shareholder of Amazon and then you see, or even any company out there, and then you see a company announce a reshare purchase program or share repurchase authorization, then that's a bonus, right? That's a bonus as a shareholder for you. It's another way of like paying a dividend to a shareholder. So it's always a good thing to see these. All right, let's go talk about Thor Industries, okay? Thor Industries. TH, oh, we need to get back to Trading View. Let that load for a moment. THO, which is Thor. Let's click this button. Okay. All right, so Thor was up 3%, and it's now after 6 o'clock, so we don't have the after hour information here. But they reported their earnings today, and it wasn't that bad, quite frankly. So we're going to dive in to Thor and their earnings here. Now, this was the biggest beat for Thor in their EPS in the history of the company, right? And if you want to get a quick idea of Thor, we can hop over here for just a really quick second, just a quick minute. Oh, yeah, this is something else too. Thor has now hopped into the electric RV sector. Winnebago, who is also an RV manufacturer, also has hopped into the EV space for RVs. So, an EV RV. But Thor has a motorized electric RV and also a tow behind electric RV. So it's pretty cool. It's a very, very small part of their business right now. But it is something worth keeping an eye on, as you know, the electric vehicle phase, it just continues to accelerate. I mean, look at that. When was the last time you saw the inside of an RV look like that? Like hardly ever. I mean, look at this. This is just crazy. Look, I mean, it's got these screens right here. I mean, this isn't what a typical RV looks like, but yeah, electric. Way to go. Control it with your tablet, your smartphone. So that's just something interesting there from Thor that I just wanted to point out. I find it interesting. And again, Winnebago, who hasn't reported earnings yet, ticker symbol WGO. Winnebago also is in the hopping into the electric EV space. All right, so let's talk about Thor here. And I mean, look at this downtrend that they've been in. It's like a perfect downtrend. And if I actually replace this trend line here, right? And actually, I should have just gotten a new one because it doesn't line up exactly from the top. But from here, January of this year, straight down, I mean, this is lining up like perfectly, just like the S&P 500 in that trend line and how it lines up so perfectly. We'll just take that one out. All right, so Thor, who is an RV manufacturer, an RV giant, right? Thor and Winnebago. Those are the two biggest. They reported strong Q2 earnings results. Now, the quarter included Thor's largest EPS beat over the past 5 years and strong revenue upside. The good news was definitely needed as the company's share prices have been on a steady downtrend. I mean, you can go back to May of 2021 for this downtrend when it was up at $140 a share, which isn't even on this chart yet. I have to go back even further in time. And then yesterday or this morning when it opened, it was around $85 a share. So that was a really big decline for them. Now, that EPS beat is definitely the standout from their earnings report by far. It was Thor's third consecutive $1+ EPS beat. So, maybe the upside wasn't entirely a surprise since they have been beating EPS so greatly, so magnificently, like Thor would, right? But nevertheless, it was a beat. So Thor's biggest beat by a notable margin as well. The company also seems to have navigated the supply chain issues really well this quarter. Thor noted that consumer interest is at an all-time high, and that is true for the boating industry as well. And for the RV industry, that's definitely the record that was set for attendance and sales at the this year's Florida RV Super Show is just evidence that you can use to back up that statement from Thor that it is a hot demand season or hot demand for Thor right now. Now, that show is the largest show in the U.S., so there's definitely some credibility there. Now, I think the upside can partly be attributed to uh, higher margins resulting from Thor's decision to not chase market share at any cost. They just are letting it come organically. Gross margin jumped to 17.4% from 15.2% just a year ago. So that's a nice improvement. Now, fueled definitely fueled by higher sales, operating efficiencies, and a reduction of sales discounts, right? Not so much come in and get your $5,000 discount at your local RV dealer. No. They weren't doing that. So that helped out as well. Now, the 220 basis point increase may not sound that big, but the RV section runs on super thin margins. So any uptick has an oversized impact on EPS. Strong demand and supply chain issues caused a backlog to swell to $17.73 billion. And that was an increase of over 60% year over year. So Thor is making progress reducing that backlog, which declined quarter over quarter from 18.07 billion at the end of Q1. So that's a good job there, Thor. Also, for the towable segment, because they've got motorized and towable, dealer inventories have grown closer to optimal levels as Thor heads into prime retail spring/summer season. And that's the same for the boating industry. However, Thor is being careful not to overproduce. It seems the industry has learned its lessons from the last upturn in 2018 when it overproduced. And when you have an abundance of supply, um, it causes an oversupply to form as the market starts to slow down. So, good job again, Thor, for doing that. Looking ahead, Thor did not provide guidance, but it did sound bullish on its perspectives through the remainder of fiscal year 22 and into fiscal year 23. The RV industry forecasts project total North American wholesale RV shipments coming in as the second best year on record. And this is in line with Thor's upbeat view of what lies ahead over fiscal year 22 and 23. So, the bottom line here on Thor is this was no doubt a great quarter for Thor. Um, Featuring a nice upside and bullish demand for their products. Now, there are a few things to be cautious about in the RV space right now because it is facing three significant headwinds. Number one, rising gas prices. Anything that has a internal combustion engine is going to cost more to operate because gas prices are going up. As RVs, they definitely consume a lot of gas as well. So that could be a headwind right there. Rising interest rates, that's the second one. Now, most consumers need to finance an RV. Now, there are lots of consumers that come in and pay cash and do so for boats as well, but the majority do need some sort of financing. With rising interest rates, that could be a headwind. And then supply chain issues is the third potential headwind for Thor right now. Even though they did pretty good this past quarter with the supply chain. And I absolutely commend Thor, as I said at the very beginning, for starting to get into the electric RV side of things, because that would cut out one headwind altogether, having to buy gasoline, right? Yeah, absolutely. And they recently introduced two new electric RVs, one towable, one motorized. Like I said at the beginning, we were looking at their website. Now, even though it's a very small part of their business right now, but that's not really the point. Overall, the report bodes really well for Wells Fargo, ticker symbol WGO, and their upcoming earnings. And I believe that's on March the 23rd when they report. Just remember to take a cautious approach on the RV space right now because of those three headwinds that I mentioned. All right. So, what do you think about Thor's earnings report and the outlook for the RV industry? Um, Typically, the RV industry is a leading indicator for the boating industry, right? Usually, what happens in the RV industry is, can be a half a year to a year and a half ahead of the boating industry. So, we should continue to see also strong demand in that recreational product. So, Brunswick uh, uh, is a good company if you're looking for boat manufacturers. Also, for the dealer side, we have Marine Max, ticker symbol HZO. Uh, those would be the two if you're looking for um, manufacturing boats or dealer selling boats. They're the two best. All right. So that wraps up everything that I wanted to talk about today. So I hope you enjoyed today's video. And I'll go ahead and wrap it up here. Remember to click that like button, share this video, and if you like the perspective, then beat the market with us. Click the first link in the description or the link in the live chat and become a member. All right. And I want to thank you again for being here with us. And yeah, that would be it. All right. Thank you. Have a good evening. And I'll see you in the next video.